Hello, fellow traders. 'Tis I, the rumpled one. It's Wednesday, December the 19th. The year's 2018. Let's talk trading. After losing, we have to face facts. We will have losses in trading. Question is, what do you do after a loss? It's funny, I was watching some videos on Miatas. Those of you who have been with me for a while, especially back in the 2000s, early 2000s, know I like Miatas. So I was watching some Miata videos. And then, you know how they have those videos off to the side, other ones. They had one on Bruce Lee. And so I was watching that. Then they had some other ones. Anyway, I stumbled across a video, um, or a couple of videos by this guy named Dan Locke. Never heard of him before, but he was actually talking about street fighting, and then he had some success videos. So I looked at one and said, "Wait a minute, is this guy Tom Vu or something?" Anyway, he talked about habits and about what poor people do that rich people don't. So I was watching this and I was cracking up because it's funny because he didn't tell me anything I hadn't heard before. He had a couple of good sayings though. He says something like, "If you're lame, you blame," and it made me think. It's so easy to blame things once again outside of you. We talked about this yesterday, rather than focus on you as the thing that needs to work or the thing that needs to be improved. And he talked about habits. And so if you're losing and you're constantly losing and you've been doing that, then you have the habit of losing. So what you have to do is look at what you're doing on this regular recurring basis. And you just basically write out the steps. What are you doing? And then when you see it, you might have to change one of the steps. And that might be the difference between losing and winning. So for example, if you are constantly rushing your entries and your exits, that's what you need to change. Maybe you abandon your plan. So that's what you need to change. It might just be one thing. So you look within, you see what your habits are, this habit of losing. And then you basically write it down and you see, and then you start fixing it by changing one thing at a time. It might be eliminating something. It might be simple as second guessing. It might be something just so simple. Maybe your position size is too large. Maybe you have to work on your money and risk management. Because trading is, it's a survival game. It's like they had that TV show, I think, what's it called, Survivor, and it was like what the final episode's coming up. Only reason I know this, not that I don't watch it, is because I had the news on last night, and it was like one of the commercials, and I happened to overhear it because you know how they repeat the commercials a couple of times, so it was like, oh yeah. But if you think about it, trading is surviving. And another thing this Dan Locke guy says, poor people watch TV and rich people read books. And I had to crack up because I live out in the country. I only get one channel. And usually the only time I watch TV is Sunday nights. I watch the CBS Evening News, Full Measure, and 60 Minutes. But actually, since I've been shooting pool Sunday nights, I haven't even been watching those shows. Maybe I'll catch the last half, or sometimes I'll catch 60 Minutes. Um, But anyway, I'm kind of getting way off track here. Thing is habits. And what is your habit after you lose? Do you analyze, or do you just scream and blame everybody else? Is it it's bad luck? Oh, the market's manipulated. All those market makers ran my stops, ad nauseum. So the question is, do you want to be one of those people that are blaming things outside yourself, or do you want to be one of the people that sits down, writes everything out, step by step, what you're doing, see what your habits are, see which habits need to be eliminated or changed, or actually replaced with a better habit, a more productive habit, a more profitable habit, and then you can carry on. So let's carry on here. The euro yen, 73 pips off the bottom. It's, as you can see here, it is cleared that bottom wick zone. It entered and it came out. We can see it better if we drift down to the week. Oh, we still have that one pair that hasn't filled that gap. You can see here on the week, we went through that lower wick zone, came back, and now we came back the other way, and we're into the upper wick zone. Looking at it on a daily, you can see right here, pretty much euro yen rocketed right through that upper wick zone, broke out the 28.10. We're sitting at 28.35. Range is only 66, only two pairs over 100, with that euro AUD being one of them. Actually, we should look at that. Let's just take a quick look since we've mentioned it hasn't filled that gap. And you can see right here, it gapped up, and it doesn't look like it wants to fill that gap. So sometimes you have to look at these before you just jump in, say, no, it doesn't. Actually, that's not the gap. The gap was, when was Monday? Wednesday, Tuesday, Monday. So right there, we can switch over to the weekly and get a better view. So there's the close, there's the open, right there. So it basically opened at 44, low of 41. And let's see, we have a close here at 40. So you can see here, it missed it by a pip. I don't think it's coming back over the next 2 days. So sometimes you can just analyze it and say, no, it doesn't look like it's going to come back. So you can see what's happening here once again on the daily euro yen, right through that upper wick zone. And you can see here we had we had a missed pivot that got taken out, and we had a pivot. Both were above the open, signaling a long bias. You can see here there was a winner there. It came through here short. It came back hard, and obviously right here you can see it's going to scrape through that wick, right? Because we're looking to the left. So right there, when it came back here, that's just saying time to scratch. And we came back down through the daily open. Right there is a trigger right here. It's already, once again, looking to the left. You see those wicks. It's not penetrating. So that would have been another time to scratch. Long trigger. And here's your chicken dinner winner right there. Hitting that missed pivot. Went right through the weekly open. You can see here these weekly open trades. You just take the cross direction of the H1 candle, going for a handful of pips, and finally it broke through. You see here it went through 3, 4, 5, 6, 7 previous candle tops. But what's that telling you? It's moving up. That's what it's telling you. You can see that with your own 2 eyes. And for those of you, you can see here we're making a high. So this means we're going to have a holo trade on the next hour. in about less than 5 minutes. And we're also going to have a 1, 2, 3 because this is the candle that made that high. Rats, get ready. Red rats, get ready for a reversal. Oh, we left that on the H1. We can put this back on M15, the normal, so you can see here what's happening. You see that rat zone's getting pushed up, looking for a rat reversal. Once again, we took out the pivots. Here's the weekly pivot, 128.45. It could happen today, could happen tomorrow, and the monthly pivot, see if price returns. And we took out that pivot from yesterday. We've seen that. So we're back to the 2 missed pivots for the year. 3 ball at the top. Once again, Larry live trade going opportunity here. Next candle, we're either going to be going, depending on where this one closes, we're either short at 30 or short at 20. Or we'll take the whole low. And you can see here, lots of selling going on. Blow off top possibility. Okay, looking at yesterday's 5 lines from yesterday's candle, the daily candle. You can see here action at the high, action at the previous open, action at the midpoint and close. Showing the wick zone once again, a nice pop out of the wick zone. Once again, for those just tuning in, wick zone is statistically based. We do the analyzation. Price doesn't like staying in the wick zone. In fact, it only stays in the wick zone about 30% of the time. Maybe I should put that the wick zone analyze. I got enough room here. I could maybe put those on this chart. I'll have to think about it. And as you can see here, we've got the whole low right here at 22. We've got about 3 minutes left in this candle. So we'll see if we get a whole low trigger, or probably want to wait, let this candle close and see what happens. You can, the inventory retracement bars with the Rob Hoffman right here. We had a couple long triggers at 16 and 19, and nice run there. We had short triggers have been put in at the 05 and the 00 or 000. You know I like this line. Look at this 500 and just selling ticks. Once again, we had the weekly open from last week. Right there, price shot through, came back. We had the weekly low from last week. You can see price entering into that wick zone, exiting the wick zone, and back in that weekly wick zone. On the ticks, once again, we had all that selling. You can see here the ask drops below the peak of the bid and is just coming down, down, down. You can see here we had a little buying tried to start. So right now we're in a wait mode to see which way price is moving. Einstein line, boom, right there. And you can see the selling good for about 3-5 pips at the moment. Let's see. Okay, once again, looking at the inside bar. This is the daily inside bar. And you can see here, price is trying to get back in. So that's it, fellow traders. Remember, if you're losing, write down what you're doing, because you're doing it repeatedly. So those are your habits. See which habit needs to be changed, replaced with the more profitable habit, because it's not what you trade, it's how you trade it. So get out there and drain the banks.